Up for Donald Trump's visit. The arrival should be just any time soon. But let's also welcome on board Dr. Azad Moopen, who's the founder, chairman and MD at Aster Healthcare, joining in on the show right now. Remember, Aster shares were up 43% in the last 6 months itself. Investors are saying that the company investment phase is over. Mr. Moopen, just wanted to understand from you what then is the volume growth which will lead to better growth in the coming quarter, and what is it that you have to say about the same?
So we have been having good margins as well as both in India as well as GCC, but more so in India. The India margins have grown from 10.4% to 12.6, 10.6 to 12.4, which is a significant growth in the whole year if you look at. And this is something which hope that we'll be able to continue doing in India definitely, and even in GCC there will be growth. So the margins will definitely improve, and also the other areas where we are looking at is in India especially, we are looking at ways in which we can have more of volume growth. Already there is a growth happening. So looking at the investments and the plans for India, we are reducing the capex. There are some committed projects, but these are all capex light, and which we are continuing. But at the same time, we are looking at new streams of revenue, like the labs, which we already are which we are starting in March, and also other areas where the cost or the capex requirement is very low. And there is an operationalization of our existing hospital beds which are there already, and that will definitely give us an advantage of having a large amount of volumes coming in without any additional investment.
Right. One key investor concern for Aster, though, has been the lack of FCF generation. Will the focus now shift from just expansion to maybe FCF?
Sure, that's the whole idea, and we had this growth phase when there has been some commitments made, but we are gradually reducing our capex in the next 3 years for the nearly 1,500 beds which we have to build in India, which is committed. It will be about 750 crores that we will be investing in 3 years. That is about 250 crores, which we hope is required for us to have that long-term pipeline of growth also. So on the whole, the focus is to reduce reduce capex and increase the cash flow, free cash flow. And that is what we are looking at. We know that that is what the investors want, and we are looking at that.
And can you tell us about the fast turnover in the India business? This is despite the fact that there have been challenges. So what is the overall picture on the India margins?
Yeah. So this is mainly due to one increase in efficiency. So we have now a control on our HR cost. We had employed the EY to do an efficiency improvement program, which helped a lot in reducing the manpower cost. As well as we are now having the purchases and all streamlined, as well as we have common formulary, which is helping us to reduce the cost. So the two main costs are, one is HR, another one is the material cost. These two are under control, and we are also changing the mix of our payers by changing from the schemes into more of cash-paying patients, as well as into areas like the TPAs and the government contracts and all. So our top line also should increase, and of course, along with what I told about the operationalization of our beds.
There has been overall strong margin expansion, in India and GCC. Is this going to continue?
Yeah, so the margin improvement as well as the even top line growth in India is quite strong. So that's why if you look at, we have been having earlier 15% of our business only from India. Now it has gone to 19%. And we hope that in 3 years we'll be able to reach 25% from India. And there's a strong growth happening with our focus on the metros with the large format hospitals, low cost, low capex. I think we will be able to have strong growth in India. Of course, along with that, the growth in GCC also has to be there if we have to grow at this phase. And definitely, India is having more focus when compared to GCC when you look back 5 years back.
I'll tell you.
Okay. Aster's plan to move up the complexity ladder in the UAE, will that yield results in the long term? How are those plans shaping up?
Yeah. So we have a definite strategic advantage when compared to our peer group or others. They have just hospital clinics or pharmacies, as well as they are only into a single segment of the population. We cater to all the three segments of population, that is the upper income, middle income, and lower income, through our Medcare, Aster, and Access brands. So we have definitely an advantage when it comes to insurance coverage. The insurance companies would like to go with us. So we think that we are in a good position to leverage our existing position and move it upward.
Okay, and what's your view on the spread and the new flows around coronavirus? Do you think it's turning out to be bigger than was earlier anticipated?
Yeah, so I think that, basically it is a mild virus which causes only maybe 2% of mortality. That also in debilitated patients as well as old patients. So there is a scare element, and we know that every year a large number of people die due to normal influenza. But here the issue is the spread, and the spread is an issue. It is coming into some other geographies also. But on the whole, I think that it will die down without causing too much of any mortality or morbidity. It is more of a scare rather than a real illness spreading and killing people. I don't think it is happening. We have to be careful. We have to quarantine, and we have to do all that is necessary to reduce the spread. But at the same time, I think it is more of a fear rather than the real illness which is causing all this panic.
All right, Mr. Moopen, thanks so much for joining us on that. We're going to leave it there for now. Let's take a very quick break. Back in a moment.